Hello and welcome. In this lecture video, we'll be covering Chapter 8, the beginning of Chapter 8, and I'm on page 144 of your course pack. So in this lecture video, I'm going to be giving an introduction to the idea of internal controls, okay? So internal controls are sets of processes, procedures, and technologies that can be used to improve effectiveness and efficiency of our internal business processes. They can be used to reduce fraud, and they can also be used to encourage or ensure reliable reporting. So when you talk about safeguard the assets of an organization, making sure that we protect our inventory, that our inventory is not stolen, that our cash is not stolen. Ensuring reliable reporting, talking about that second bullet. For example, what we say we have, let's say for example that we have $10,000 of accounts receivable on our balance sheet, that $10,000 is correct. That truly is the right number. Okay, so making sure that's correct, because investors and regulators, creditors use our financial statements to make important decisions, and so we have to make sure that they're right. Okay? Also, to improve efficiency and effectiveness, and also the final objective of internal controls would be used to make sure that we follow company policies. So let me give you a few examples of internal controls to put this in perspective. So the first one would be when part of my job as a professor is not just to teach, but it's also to write research papers. And one of the things that we frequently do is to travel to conferences, to present our research papers, to get feedback on it first before we submit it for publication. This is an important part of the publication process, okay? So if I want to go to a conference to present research, I first have to draft up a budget to say, this is the conference fee, this is how much I think I'm going to be paying for my meals, and this is my hotel. And then I also have to get 3 different quotes for airfare. I have to get that. So I have to find 3 different airfare quotes, maybe one that involves a stop, and then maybe one that doesn't, a direct flight, and probably the one that's a direct flight that's at a good time is going to cost more. Okay, so I have to show that I've gotten 3 different airfare quotes. Going through that policy of finding 3 different airfare quotes, right, that is consistent with the idea of internal controls. And it's also consistent with the idea of safeguarding the assets of the organization. I'm going to be spending UMW money to go present at this conference. And I need to make sure that I get the best airfare. UMW wants to make sure of that. They don't want me flying business class. They're not going to pay for that. They'll send me on coach on one of the cheaper airfares because they're safeguarding their cash. The other thing that I have to do when I want to go to conferences, I have to put all this together, all those quotes, and say this is the hotel cost, and this is where I'm going to stay, and this is where the conference is, and this is how much the conference costs, and all that kind of homework. I have to do all that homework, and then I give it to my boss, and my boss reviews it, and then he or she signs off on it. So before I go to the conference, my manager has to authorize this. That authorization is another internal control. Why do we do that? Again, making sure we safeguard the cash of UMW. That Dave's going to go to this conference out in Cabo. Oh, that sounds great. Is this a real conference, or is this like is this just we're just funding Dave's vacation here? So, those are the things that UMW has to make sure is right, that this is a legitimate conference, that it's a good conference, that's just not some fly-by-night conference, and there are those that are set up in nice vacation spots, and maybe there's some research presented, but it's not really that hard to get into. You're not sure how rigorous it is. So we want to make sure it's a good, rigorous conference, that those papers are published in conference proceedings. Why does UMW do that? To make sure that we're spending our money on legitimate conferences, okay, not just funding someone's vacation. All right. So that's kind of getting to the idea of safeguarding the assets of UMW, that authorization process, and also making sure that we adhere to company policies, and also improving effectiveness and efficiency. Making sure that you do go to a legitimate conference is consistent with the idea of effectiveness. Okay, I'll give you another example of internal controls. I'm on the vestry at my church, and part of my job is at the end of the church service. During the church service, we hand around a collection plate. And so people put cash in the collection plate, and checks and any loose change that they have. So at the end of church, part of my job, serving on the vestry, is to count the money and to put it into a pouch. And then I put that pouch into a safety deposit box. Okay, I have to put it, not a safety deposit, into a safe. Okay, I put it into a safe in the minister's office. So we have a few internal controls associated with this process. First is that I go and get the collection plates. And when I go up to get the collection plates, I have to have another person, have to have another person with me. There has to be two people getting the collection plates. And you know what? That other person should be a member of the vestry. If they're not a member of the vestry, that other person can't be my wife. It can't be my daughter. It has to be somebody else who's not a family member. Okay? When I count the money, right, I have to have another person there with me. Hopefully it's a member of the vestry. If it's not a member of the vestry, it should be someone who's not related to me. Okay? And then when I put it in the pouch, somebody else is there watching me. And then what I do is then I go put it into a safe in the minister's office. And then once it's in the safe, I can't get to it. The person who gets to it is our bookkeeper later on. And then she counts it up and puts it in there and logs it. And I'm sure that she has somebody else with her when she's doing that too. Okay? So that's an idea of internal control. So those internal controls happen even in a church. Right? Why is that? Well, if I'm the only one counting it, if I really need cash and I'm desperate, I could take some cash and nobody would ever know. No one would ever know. So we have to make sure that there's two people there. Why does it need to be another member of the vestry? Why do they want that? Well, vestry are bonded. We're insured. Okay, insured against some losses. Someone who's not in the vestry is not going to be bonded. Okay? Why don't you want another family member? Well, if it's my wife who's helping me out, and we're both desperate, we both need the cash, well, we're husband and wife. Might collude. But if you have somebody else counting it with you who you don't know very well, it's going to be much harder to get that person to be on board with you to steal money. Right? So that's another good example of internal control. I also talked about technologies being examples of internal controls. When you log in, right here at UMW, I have to log into my laptop, right? That's another example of internal control. Another example of internal control would be UMW could be logging every website that I go to. Making sure I'm using UMW assets for approved purposes. Okay? So, back in 2002, we had the Sarbanes-Oxley Act, also known as Sox. Okay? And one of the big factors, Sox was done in response to some of the ethical catastrophes that happened. For example, Enron and WorldCom. Some of those big financial disasters that we had that involved some real ethical issues, especially on the part of auditors. And so what they did is they set up Sox, Sarbanes-Oxley, as a response to some of those problems. Okay? And so some key provisions of Sox, especially with regard to internal controls. There's the Sox Section 404. And in Section 404, it's talking about this. Okay? So it requires managers and auditors whose stock is traded on an exchange. So, for example, public companies, PepsiCo, okay, ExxonMobil, Hewlett Packard, for example. They're traded on public stock exchanges. Big companies like that, traded on public stock exchanges. They have to document and certify their system of internal controls. Auditors have to provide must evaluate internal controls and then also give an opinion on the company's internal controls. Auditors are also restricted to what consulting services they provide a client. So if the auditor audits the books of this client, they should also not be the ones to install the financial accounting system for that client. Okay? And that's what I'm saying here. Can't implement ERP software. ERP software often runs accounting functions for an audit client. Okay? There's also the person leading an audit can't serve more than 7 years without a 2-year break. So we're trying to get the idea of fostering independence, that we don't want these auditors and then their clients to become too close, because then if they're too close, it's almost like the idea that I talked about before with counting the money. You and your significant other counting the money together, you're very close. It reduces, or you could collude. That's the problem. You could work together to then commit fraud. But if you don't know the person very well, the chances that you're going to work together to commit fraud are lower. Okay, so what we try to do is to break it up. Okay? Then what we have is the PCAOB, the Public Company Accounting Oversight Board. Okay, and they oversee auditors, so they audit the auditors. There also are harsh penalties now for violations. We have larger prison sentences. And then, as I was saying earlier, Sox Section 404 requires managers to document and assess the effectiveness of internal controls, and also to evaluate the internal control structure. And auditors have to provide an opinion on managers' documentation and then managers' assessment of their internal control. Okay. Let's talk about some principles of internal control here. These are some just core principles. So the first one would be that we establish responsibilities. So for example, who is responsible for counting the money after the church service? Vestry. Those are the ones responsible. So we establish that responsibility. Okay. Who is the one who is responsible for signing off on any expense reports? The associate dean. That's who's responsible. Okay. We also have to maintain adequate records. So when I go to a conference, right, one of the things that I have to do is save all my receipts and then submit an expense report. And that expense report is kept. That documentation is kept. Okay. We also want to ensure assets and bond key employees, and this is what I was talking about, that vestry. That's why we want another vestry member of the church counting the money, because they're bonded. Okay? That's what we're saying right over here. They should be bonded. The company, or in the case of our church, they purchase an insurance policy or bond against losses from theft. It reduces that risk of loss. Okay? And that's what I'm saying over here. Bonding can discourage theft so that the employee knows that an independent bonding company will be involved if theft occurs. We also want to separate custody of the assets from record keeping. So the person who has access to the assets should not be the one to keep records about that asset. That's why the treasurer has the custody of cash, and then the controller in the organization is the one who keeps financial accounting records. Okay. We also want to divide responsibility for transactions. That's the idea of separation of duties. That gets to that idea of authorization. We want to have a separate person authorize my expense report, for example. Apply technological controls as much as possible. And then what we also want to do is have regular and independent reviews. Those reviews of the internal controls would be done by the auditors. I'm going to end this lecture video now, and I'm going to start by talking about this limitations of internal control right here, okay, in the next lecture video. Thanks so much.